My name's Eb, licensed CPA here. Wanted to help the freelancers, the small business owners, those who don't have taxes taken out of their paycheck. I want to help you remember that this is the fourth quarter of 2021, correct? So if you are able to save at least 25% between state, Illinois, for example, some people don't have state tax, income tax, right? But at least 20% for federal tax for everyone. If you're able to save at least this amount throughout the year, then you are better prepared for likely tax liability when you file in April, right, of the following year. So what am I talking about? The estimated effective tax rate of most people, including business owners, like a rule of thumb, after all of the different tax credits and deductions shake out and the brackets, is 20% to be safe, 25% in a high tax state. So this is if you own a restaurant or you sell, if you have a business with some kind of sales tax, make sure you also save about 10% of your revenue. In most, well, from my experience, it's usually about 10% of your revenue between the state and county and the different municipality taxes. So you got your sale. If you're a restaurant, let's say you're earning 10,000, just for easy math, you're selling 10,000 worth of products per month. You want to have $1,000 put away out of that 10,000 to pay sales tax. So now it's like, okay, that's sales tax. Isn't this about income tax? Yes, it's about income tax, but sales tax is relevant so that someone who's only preparing for sales tax doesn't assume they're also preparing for income tax, right? So after the 10% of your gross revenue, you can figure that out likely without much bookkeeping, right? But you do need bookkeeping to understand what your bottom line will be, right? So if you want to understand what your tax liability is, of course that depends on how much money you make and the different tax deductions and tax credits. But basically, make sure if you just want to be safe, out of every dollar of product you sell, 10 cents goes to sales tax. If you're selling a service, then you usually don't have any sales tax, right? So out of every dollar that you sell, we're going to talk about for those who have a product, right? We talk about 10% goes into, you can make an extra bank account. I recommend, some quick online bank like Ally you can use in order to create an additional account, or even you can label different buckets within your account on Ally and using Ally Online, and then you can designate that for sales tax 10% of your revenue that you transfer into that account every month, and then for your income tax, estimated tax. So income tax, estimated tax is estimated income tax, right, for the year that you send in quarterly. So those are the dates. We can go over the dates, but basically the next date coming up is January 15th, 2022. You want to pay as much of your overall tax that you would have been due. So on 100,000 in, we'll say, revenue, you want to make sure that you're prepared for at least 20,000 in tax. And tax is off of income, but I'm trying to make this as simple as possible. So for every $1 you sell, put aside 20% for federal tax, and then nickel if you're in a state tax. If you're in a state with that taxes state income, they had state income tax. Okay, so that's a quarter for income tax, and then if you are if you sell product as well, then you want to put a dime away for sales tax, and you of course want to make sure you're making those tax payments on time. That's a big issue I see. A lot of small business owners and freelancers, people who don't have another, the company doing it for them, basically, they have to make sure they have an accountant and they have bookkeeping, or they do it themselves, right? And think about a business that doesn't count their own money, right? Every business needs to count their money. Usually it'll start off as an owner, but in order to be prepared for taxes and everything, and even have financial statements, tax returns, and everything you need for business credit, business loan application. You need apply for grants, PPP, EIDL, etc. That the loans. Then you need to have your bookkeeping in order, and I'd be happy to help you with that. But to kind of summarize it, I know I touched on sales tax, 10% off every dollar, right? And income tax, 25% overall, with a nickel of that for state and 20% of that for the federal. And if you have a separate savings account, and every dollar you put 10% in a separate account, sales tax, and then you have another account, you could say state income tax and put 5% in there, and then you can have another account, so they're talking 3 accounts overall to be prepared for the various sales tax and income tax. So then the third account, of course, is the federal income tax account, and you want to put 20 cents out of each dollar in there. And then of course you have to have your taxes prepared. We do tax preparation as well in order for you to know exactly how everything shakes out. But if you use those rules of thumb, if you will, 10%, 10 cents out of every dollar in sales tax saved specifically, if you leave it in the business account, a lot of times it'll get spent, so I recommend transferring it to a separate account or paying it right when it's due. But it's something very easy to fall back on, and some states will start threatening to withhold your business license and things like that. So it's very important to stay current with your sales tax and also with your estimated income tax payments. You don't want to be completely shocked come April at what your tax bill is. In a perfect situation, you have a bank account with 20% of your revenue sitting in there, and after all of your write-offs and everything, that's more than enough to pay your income tax, right? Your federal tax. And then for your state tax, you have 5% of your overall revenue in there prepared for state tax. That's probably more than enough too. And if you even have state income tax, and then I added sales tax. This video was actually mostly supposed to be about estimated income tax, but it's very common. I see people who are subject to sales tax, they fall behind if they're not very diligent in saving for it and paying it on time. I just decided to throw in a bonus tip there. Make sure that you prepare for tax. And really, it depends on the income. If you know that you're in the highest income, most of your income will fall in the top tax bracket, which I believe once you're single and you make about 500,000, I believe is like around the top tax bracket. So now your federal, basically, if you're high income, pretty much, I would say if you're making over 250,000 on an individual level, you net profit, you should not save 20% for your estimated income tax, but now you should save 30%. And those don't line up, those numbers don't line up exactly with the tax brackets. I'm speaking from experience, because of course you get various deductions and credits that offset your tax. And then, so my rule of thumb, withholding amounts, higher income, which I just introduced, 30% instead of 20%. But you really need a CPA to go through the details. So I'm giving you kind of like the ballpark, and now you can get it customized for yourself by talking to a CPA, such as myself or another well-reviewed, reliable CPA, all right? If you have any questions, we can schedule a call. The information will be in this video. Thank you.